Good evening, everyone. Welcome to the channel. Today I am going to talk about China Power Interim Report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. China Power International Development Limited offers a diverse range of businesses and services, including electricity generation through various sources such as coal-fired, hydro, wind, photovoltaic, natural gas, and environmental power plants, energy storage solutions, green power transportation energy solution, services, logistics services, technical services for electricity generation investment in new energy power resources. These services are provided across multiple segments, including thermal power, hydropower, wind power, photovoltaic power, and energy storage. China Power International Development Limited's stock price has increased by a little over 7.53% in the past year, driven by several positive developments. One key factor is the acquisition of Daju Energy, which indicates potential for growth and expanded operations. The company's interim financial results also showed a stable net income with a profit margin increase to 11%, driven by lower expenses. Additionally, the issuance of RM billion super and short-term commercial paper in August 2025 suggests financing activities that support ongoing projects and operations. Overall industry sentiment in the Chinese power sector, particularly regarding renewable energy and economic stabilization efforts, has also contributed to a general supportive effect on power company stocks. The primary drivers of revenue growth for the company can be attributed to several factors. Firstly, the thermal power segment experienced a significant reduction in fuel costs and effective coal procurement measures, leading to increased profitability. Additionally, the wind power segment saw profit growth due to the reclassification of a wind power company from associate to subsidiary. Furthermore, the consolidation of several wind power and photovoltaic power project companies into the group contributed to revenue growth. The growth in installed capacity of new energy sources, such as solar and wind power, also played a crucial role. Moreover, increased power consumption among secondary industries and national total electricity consumption, growing by 5.6% year-on-year, further boosted revenue. On the other hand, the primary drivers of revenue decline include the shift in function of coal-fired power to primarily focus on frequency modulation and peak load shaving, leading to decreased electricity sales and revenue. The photovoltaic power segment experienced a year-on-year decline in profit due to adjustments in average on-grid tariff. Additionally, hydropower segment saw a decrease in both revenue and profit due to reduced rainfall in regions where hydropower plants are located. Overall, the company's revenue growth can be attributed to a combination of factors, including effective coal procurement measures, consolidation of power project companies, and growth in installed capacity of new energy sources. However, the decline in revenue is largely driven by the shift in function of coal-fired power and adjustments in average on-grid tariff for photovoltaic power. The company is indeed generating positive operating cash flow. The net cash generated from operating activities has shown a significant increase over the years. In 2024, it was RMB 7,471,217,000, which is already a substantial amount. However, in the 6 months ended June 30, 2025, the company's operating cash flow has surged to RMB 10,741,146, indicating a notable improvement in its financial performance. This upward trend suggests that the company is efficiently managing its operations and generating sufficient cash to support its growth. The company's debt level has experienced fluctuations over the past year. While there have been instances of increases, such as a 3.76% rise in total debt from RMB 197 billion to RMB 204 billion, other sections show decreases, including a drop in non-current debt by RMB 956,025 and a decrease in long-term bank borrowings by RMB 6.12 million. The interest expenses have also undergone changes, with some subsidiaries experiencing decreases, such as SPIC's 6.1% decline, while others saw increases, like CPI Holdings 139.2%. Overall, the company's debt level and interest expenses have not changed significantly in a consistent manner across all sections of the financial summary. The company's financial performance varied across different segments and regions. Notably, China was a standout performer, contributing positively to the overall results. Within the energy sector, thermal power and photovoltaic power electricity also showed strong performances. In contrast, hydropower electricity struggled, indicating areas that require improvement. Management is optimistic about the company's outlook, citing opportunities presented by lower financing interest rates. They plan to optimize debt structure and seize these opportunities to drive growth. The company will maintain a minimum annual dividend payout ratio of 50% for 2025. In terms of strategy, management has adopted a joint operation development model that combines coal-fired power with renewable energy. This approach aims to optimize power generation and sales strategies, capitalizing on market opportunities such as virtual power plants. While this may result in increased emissions, the company believes it is necessary to prevent blockage and ensure long-term economic operation. The company's financial summary reveals a significant aspect of its shareholder returns. Notably, the company has indeed paid dividends to its shareholders, indicating a commitment to distributing profits and rewarding investors. However, there is no mention or evidence suggesting that the company has engaged in share buybacks. This distinction highlights the company's focus on dividend payments as a means of returning value to its shareholders. That concludes the financial summary for China Power. Feel free to comment below, and I will be happy to answer them when possible.